ladies and gentlemen, if you're on the old Mind Your Biz channel, or Mind Your Biz 2, I'm going to be renaming it today, then please go over to the new home for Mind Your Biz. You can get there by going to sub.myb.lol. I'm going to go ahead and put that on screen, just so that you have it. Sub.myb.lol. And you're seeing me create this little text element live. So thank you for your patience with a little bit of additional live editing of the live stream. But there it is. If you are not at the new channel, you know what to do. Just click on through to sub.myb.lol and it will bring you over to the new home for Mind Your Biz. And we got proof of live stream. IATG 2001 is chiming in saying, wish this was not at the same time as other streamers. And I appreciate you saying that. I appreciate the sentiment. I too wish that it was not at the exact same time as other streamers. But these are the constraints that we have at Mind Your Biz. I need to stream when we can. Need to make sure that this is something that's sustainable for me, and that means this time of day is the right time. Prevents me from having conflicts with my consulting schedule, with my full-time crypto work in crypto marketing and doing crypto consulting for infrastructure. Appreciate you sharing the live stream. I see those shares also popping up in my dashboard. Thank you so much for sharing this video while we're live. Hey, the Deadwood says, morning all, good to see everyone. ... Thank you for that, Deadwood. Appreciate it. Crypto Mikkel says, new channel for Uncle Seth. Hex yes, brother. We're here at the new channel. Thank you so much for making the switch with me. This is a bit of an adventure. Those of us who are close, by all means, reach out in DMs, and I will tell you the full tale, the full saga. It is in depth, but I did go over it on the last live stream. Thank you for sharing this while we are live right now. This is the right time to share this live stream. Much appreciated. Thank you so much for that. I'm still lining up some of the content as well because we have a lot to cover today, so be a little more tactical about how we cover all of all the content. Sean C. New World Crypto says, greetings to all cool people. Martin is in the chat saying, hi, everyone. Always here to support a great person with awesome content. Huge contribution to the community. Thank you, Seth. Appreciate that so much, Martin. Thank you. Those are very kind words, and I accept that. I definitely appreciate that. I'm learning to just say thanks when someone gives a compliment, and thank you very much. Be on camera in just a moment. Thank you so much for your patience, and thank you for sharing the link while we are live. I do see that the number of shares is going up. If you could do me a solid and smash that like button as well while you tune in, and tell a friend, obviously. Smash that like. Paul D is here, says, first, I've successfully done the firsts. Once again, is it Chia Moon car time yet? It's almost Chia Moon car time, Paul. I think one more live stream, and we'll get there. That's possibly even financial advice and promises. Maybe. We'll see. Tom Crown is in the chat saying, what's happening? I think in a more broad sense, that's a very good question. We should always ask, what's going on? You guys, I know you're singing it in your head right now. Okay, you can sing it in your head. Cal Toro is in the chat saying, yeet. What are you yeeting audience members out of here? Guys, yeet them likes. That is financial advice. Do it. Get in on likes before they go up, before the likes moon. You should get in on the earliest likes. Do it. Crown only likes the top. Oh my gosh. Well, I see those views are going up. I see those shares are going up. Thank you so much, audience. Keep those shares coming. I definitely appreciate that. Be on screen in just a moment. Again, apologies that we're getting this kind of... I could just do a countdown timer, right? That's what other people do. It's very cold. You just do a countdown timer, not talk to you, not interact with the comments, but that just wouldn't be me. I could not do that to you. However, on the old channel, I am going to stop the stream. If you're over on the previous home for Mind Your Biz, the secondary channel or the backup channel, then you're going to notice that the live stream stops and you will be kicked over to the new channel. You don't have to do anything. It's just going to automatically kick you over to the new channel. So be prepared for live stream shutdown over there, over the old place, right? Come over to where the party is over here. But over at the old place, we're shutting down. You ready? Because that stream is about to kick you over to the new channel. Hey, Tom Crown says, nope, countdowns equals bad average viewed something or other. I don't know what AV is. Average view. Average views delivered? Average views developed? Average view decentralization. That's what it is. It's average view decentralization. He's right. I mean, yeah, your views will not be decentralized. They'll be congregated into the hands of our old financial taskmasters if you don't just talk at the beginning of your stream. Duration. You made that word up, Tom. I don't believe you. Paul D says truer decentralization than most DeFi projects. It's true, actually. He's right. I don't have a multi-sig in which I control like 7 of the 8 addresses. The Deadwood says this music reminds me of the movie Bronson with Tom Hardy. Oh man, really? That is a little bit creepy. Tom Hardy, he's a real one though. Seriously, who doesn't like Tom Hardy? I really don't know. John C. giving a tip of the hat to Tom Crown in the chat. It's only right and proper that he do so. Tom Crown, thank you for being here with us, guys. If you're not subscribed, obviously, to Tom Crown, phenomenal TA. One of the people who, for whom I make an exception, where I'll make jokes about how I think TA is a joke. That's not true. People who actually know what they're doing make it not a joke. Tom Crown is one such individual. You should smash like and subscribe over on his channel too. Just saying, when we're fortunate enough to have like micro celebrities in our little niche, our little corner of the internet, folks like Tom, we don't waste the opportunity to go and follow. Got a random little gem I'm pulling up as well. Oh my gosh. Australian Safe Shepherd. Anybody remember that? Oh my. It's quite a thing. Kaltora will be happy about some of the news that we have lined up for later on in the live stream. Ladies and gentlemen, the time is now. Let's get this thing started. Welcome back to Mind Your Biz. My name is Seth, and yes, I'm wearing the Fed LARPer hat today. It's one of the Fed LARPer series of hats that I picked up for all of our live events. If you see me in Las Vegas in the next few months, as there are a lot of events in Las Vegas, be prepared to see the LARPer series of hats. They're a lot of fun, right? I had somebody say like, hey, that guy Mind Your Biz, he looks like a Fed. And I was like, how do we lean into this and capitalize? Because it's a lot of fun. Frankly, it is. It's a lot of fun. I mean, let's be real. First off, the Feds always have the coolest colors, right? Navy, gold. It's like being in Cub Scouts all over again, right? And they also have the best sense of like function, right? Little mesh snapback. What isn't eternal evergreen and stylish about this? I don't know. Why wouldn't you wear one? Why wouldn't you get one, right? I got some. Just saying. But without further ado, let's jump straight into our markets. Current Fear and Greed Index score of 30. Dang, that's a real drop. Down from the recent pop. I got Cursed Mining in the chat. Cursed Mining, I haven't seen you in a hot minute. Gundy Stuff and Things says, good afternoon, Crypto Nation. Is it already afternoon where you are? Where? I thought you were in the U.S., bro. Even if you were like in the farthest reaches of Canada, it should be still like in the morning time. I don't know where Gundy is now, and everything I know about him is a lie. Okay, Fear and Greed Index score of 30. What does that mean in the context of recent markets? It means, yeah, it's quite a slump. It means that we're on a little bit of a downtrend in terms of sentiment. But what does that mean? Well, the Fear and Greed Index is created by taking the aggregate of sentiment as measured on Twitter and Reddit primarily, and on Bitcoin and Ethereum primarily. Yeah, other cryptocurrencies factor in, but let's just be very, very real about the context there. That's what it means. And today's theme, if you haven't already noticed, is wrecked by regs, wrecked by regulation. I think we're going to see as a theme this is a serious problem in crypto right now because we're in this weird in-between spot. And I think that the sentiment kind of shows that. It kind of proves that we're seeing that we've been not an extreme fear, not an extreme greed. We've been kind of like camping out here somewhere in fear, but kind of like trending towards neutrality in terms of the market sentiment for a while. It's a weird place to be. And you've heard me say that I usually view this as a counter indicator. If you want to use macro analysis, if you want to just look at the markets as a whole and zoom out, and you want to just pay attention to how people are feeling, then you can kind of use this as a counter indicator. If people are fearful, be greedy. People are greedy, be fearful. Pretty straightforward. Do I have to run the disclaimer right now? The red screen? It's a good time for it, right? For me to just say that's not financial advice. It's just kind of a general like Occam's razor, it's a logical razor. Just cut to the truth of it. If they're greedy, I can be fearful. I can be, a little bit worried that everyone's going to get wrecked. And we saw this twice with tops that were over $60,000 in Bitcoin. Pretty straightforward stuff, right? Very, very easy to read. And as you know, also here on Mind Your Biz, I view that as a function of price action. So jumping back into our Bitcoin chart, these are the chopsticks. This is still the trend that I have not moved yet for quite a while. And so, yeah, zooming in, we see, oh, look at that curve, a little bit of a slump. It is kind of more price action leading to market sentiment and not the other way around. Is that weird? You would think that it's just sentiment that leads to price action, and that's kind of true. But we know these markets are manipulated. At least here on Mind Your Biz, I've been saying that institutional players are manipulating this market more than they ever have before. And I think the charts like this kind of prove that. We have these really weird patterns, especially like this sideways crawl. I mean, higher lows, but yeah, we'll see if that holds true here. Looks like, yeah, we're going to continue to see higher lows, but we could see this breakdown at any moment. We could see it melt up at any moment. Shout out to Crypto Weatherman calling for a melt up for Bitcoin. We could see that. That's possible. But I genuinely believe that at some point in the future, we need to see the markets fully bleed out. Before they can recover, they have to bleed out. We need full despair, right? We need that market sentiment to be in the dumps, people to be so afraid of losing everything that they, very foolishly, like a moth to the flame, they sell the local tops, right? They sell these little peaks right here, and they miss out on buying these little valleys down here. That's what I think is required for us to start to recover, right? For nature to heal itself in these markets. And because of money printing, because of interference from institutions, we're seeing that so many markets have not just failed, right? They haven't failed to the point they would need to properly, organically build themselves back up. Financial advice? No, but just, that's PTSD from having lived through the last market crash in 2008, right? And then seeing the .com bubble burst as well, right? Both as adults, right? As an adult, right? So, there's somebody in the audience like, how old is this guy? Just old enough, just barely old enough, right, to be able to say those things. But yeah, so we see that in the past, these markets have needed to correct, right, in order to then recover. And we haven't seen that in Bitcoin yet. It hasn't fully corrected it. It hasn't had that 85 to 90% correction to the downside to then be able to rebuild, right? We need to shake out the weak hands, but automated arbitrage bots, automated trading bots, the larger funds, BlackRock entering the picture. All of these are it's a confluence of things that are just going to create this kind of interference for a while. So if Crypto Weatherman is right and there's a melt up, first off, our volume is decreasing all the time. So how are we moving up with decreasing volume, right? But if there's a melt up with that low volume still, like he's saying, then I think right after that, it just snaps right back. And then we do see that expression of blood in the streets, right? Then that happens. Maybe it's more sudden than we thought it was going to be. Maybe it isn't as gradual as the chopsticks have outlined here. But I digress. This is something that's really important to me. I'm going to keep this story. This is my story. I'm sticking to it. So if there are people that know how to do better TA, on shorter time frames and not just zoom out the way we do here on Mind Your Biz, by all means, get some alpha from them. We're just talking about a little bit of fundamental analysis, zooming out a bit, trying to make really solid fundamental investments, not trades. But if you are interested in trading, then again, we're graced by the presence of a YouTube celebrity for their trading prowess. So check out the channels like Tom Crown. Check out Crypto Weatherman also. Those are two really great resources, and they don't repeat the same stuff. You're going to get some counterpoint from those two. Both really solid dudes. So really appreciate that they're that they F's with us over here at Mind Your Biz. Thanks, Tom, for stopping in for as long as you can. But really appreciate that. So that's our chart, guys. Still not going to change the chopsticks because I still think that we need to see the bottom of this range. Not yet anyway. Maybe we add some chopsticks. Maybe. But I'm just not ready to do that yet. I want to pay attention to that previous trend and just say that trend line, I don't think we're going to see a really big recovery just yet. I think that we're still if we, you know what? Am I going to have to change it now? Yeah, I'm going to change it now. Let's redefine that as our top. Let's just see what that would look like and put that on a new trajectory. Could we break down from there? Maybe we could. Jeez, guys, this is not what I do, right? This is not really what I do. So just doing with this kind of tongue in cheek, but that's on our public chart now. Been redefined right there. Obviously, we cannot break down. We're not going to see a trend where that line right there matters. But if that's our new top, let's go ahead and loosely grab another, recent local bottom right there. This chart makes no sense now, right? With the chopsticks. So yeah, it still makes no sense. But that's not why you tune in. The point is, I still think that we are on a general downtrend. I don't think that the recent price action over the last several weeks is indicative of what we should expect in the future from Bitcoin. I think it's going to be a breakout to the upside, whatever that melt up is that Crypto Weatherman's talking about. Maybe it's not as big as he thinks, and then it's going to break down. It's going to continue to break down, and it's going to possibly be the opposite of what we're seeing here, where it's a little more of a limping along and bleeding out, or it's a catastrophic crash. It looks like a crash. But again, guys, no predictions there. Just saying overall, I think we should expect it to break down more. All right, jumping out of the way for that red screen. Once again, guys, you don't come here for TA. You really don't. And if you do, what are you thinking? This is me just doing some macro, pulling back and saying, hey, DCA range is still here, right? We're still in that DCA range. I had my wife ask, hey, we're DCAing, right? Yeah, we want to DCA in this range, in my opinion. For us, we're okay with that. But that's my take on it. All right, moving into the cost to mine one full Bitcoin. We're over on the insights.brains.com calculator. We're going to put in 104 terahash. We're going to put in, just to be overly generous, pretend like nobody here knows how to optimize their rigs, 3,500 watts, and we're going to put in 8-cent power, because if you don't know how to get 8-cent power, then you shouldn't be in mining. I'm just going to say that right now. If you don't know how to find 8-cent power in your city, then you need to rethink your mining plan. But that would get you one full Bitcoin at $14,500 US, and I think that's going to be roughly the top of the expected bottom support range for Bitcoin, in my personal opinion. I think that's roughly where we're going to see things possibly level out to. Hey, thanks for those likes. I see a lot of likes pouring in. View count kind of dipping, guys. I don't know what that means. So we're getting some people bouncing. Sorry to be so boring talking just about Bitcoin charts and then admitting that I'm not a technical analyst. So maybe I should just fake it. Maybe I should just draw lines on a chart and pretend like I am. But I don't think I'd be doing you the best service there. Just saying. All right, guys, that's to cost of one full Bitcoin. Break-even point is 12.9 cents. It's actually gone down. So we've got, that's always a mix of the difficulty plus the net hash, guys. It's always a competitive thing. You are always competing with a different miner somewhere on the network. That said, we got to talk about the change from proof of work to proof of stake on Ethereum. We've got so much to cover in today's episode. So let me jump into that just as soon as I can. But we got some other news. Let's kind of tactically go through our regulatory side of today's live stream, guys. I want to make sure that you see that the regulation possibly wrecking crypto and Bitcoin, that this is a very real thing. So I've lined up a few articles right here that will help you see it, at least as I see it from a bird's eye view, how regulation is a huge force to be reckoned with right now, and how we need to be more vocal when it comes to groups like Coin Center. We need to be more vocal when it comes to lobbies in our states and in our country, wherever it is we reside throughout the world. We have to we have to figure out how to be heard by regulators so that they understand that they need to set up their regulations in the right way, right, and not stifle the innovation out of crypto. But first article is about Dragonchain. The SEC is suing Dragonchain over unregistered securities. So they hit them with a securities fraud suit. They claim that Dragonchain illegally profited $2.5 million worth of DRGN, their token, and the SEC is looking for a permanent injunction. I can say from our last live stream that this article about top crypto exchanges without KYC is bunk. Don't pay attention to that at all. We're going to go over our own probably written article on how to find the right exchanges. So be careful following articles that are published in this way that talk about not having KYC. But yeah, I digress. Kirsten Mining says, really enjoyable, sir, while hardware shopping for server upgrade. Appreciate that. Yeah, we'll talk about servers and validator quality servers in upcoming episodes. But the founder of Dragonchain and related entities are facing a U.S. Securities and Exchange Commission allegation. And this is the important word right there, the key word, allegation. And let me highlight that in red. That they violated federal anti-fraud provisions for their roles in raising $16.5 million in unregistered crypto asset securities offerings. So this is the most important thing to realize, is that when the SEC makes news, makes headlines like this, first off, they're typically allegations. It needs to be proven in court that these things are true in order for us to say, oh no, well, Dragonchain got taken down by the SEC. Not true. Not true. The OFAC list by the U.S. Treasury for Tornado Cash is a sanctions list. That's a very different thing. Law enforcement agency, or the law enforcement type action that would sanction the use of a certain piece of technology. That's different from this, where the SEC has to allege that something has been done wrong, and then they have to prove it in court, right? So don't be confused, and definitely don't think that Dragonchain is going down without a fight. They've adapted quite a bit, right? They've adapted from the earliest days of being backed by the Disney Corporation until now being more of a community-driven project. So shout out to the Dragonchain team. I know that they're trying hard to maintain relevance and to create some kind of an offering that makes sense in the current crypto landscape. But the SEC wants to block them from trading. They've sued other companies, obviously, over unregistered securities. And for my part, I do not want to see the SEC set a legal precedent by going after all these different crypto companies and finally getting some kind of a judgment against one of them that sticks and that forever destroys the environment of innovation here in the United States for cryptocurrencies. That seems like that's what they're after, right? Is just trying to make let everybody know, put everybody on notice that if you're going to do business here in the United States, you're going to have to contend with us, the feds, right? Well, you know what? How about you just make it a favorable environment so companies want to do business in one of the freest countries in the world? Not the most free, sadly, but one of the freest countries in the world and one of the most thriving economies in the world. Wouldn't you want the most innovative companies to be launched there? And wouldn't you want them to want to do business there? I think you would. So stop trying to scare them away. It's like California's problem all over again, right? Tesla moved out, Intel moved out, even Apple has a campus over in Central Texas. So just saying, when you squeeze too hard, it's like sand in your fist. It just starts to trickle out. On that note, Ripple's community turns on Vitalik Buterin over an XRP tweet. Here's what Vitalik had to say about it. No thanks. First off, I gotta work on my ad block over here. I've got things not quite set where I want them. All right, block that. Yeah, no, I know, sir. I don't like it. Hold on. Let's pick the full ad. Boop. Bye. Not even going to click the block anymore. All right. So, he says XRP already lost their right to protection when they tried to throw us under the bus as China controlled. Oh, this is just a feud, right? This is just a feud. Looks like Ripple XRP team is sinking to new levels of strangeness. They're claiming that their S coin could not be called a security. That's also kind of rare for Vitalik. He doesn't normally use that term. Could not be called a security for public policy reasons, namely because Bitcoin and Ethereum are Chinese controlled. Yeah, this is getting to look like a bit more of a feud. The government should punish projects that disagree with our narrative. Seems pretty on brand for Ethereum. I have a problem with this. I have a really big problem with the infighting among crypto projects. You can genuinely believe that XRP is not the best project. You can think that if you want to, and I do. I don't think that XRP is the best project, the so-called banker's coin, right? And I have some fundamental problems with XRP. You can believe that and also believe that regulating it too tightly will cause problems in the future. Consider that when you pass regulation, or us as citizens, we allow regulation to be passed, we need to think about in the future our worst political enemy being able to use that regulation against us, against our interests. And that's the case with XRP, right? And with Ripple Labs. If we do see a judgment from the SEC against Ripple Labs, well, what will happen when Ethereum moves to proof of stake? Is it impossible that the SEC could change its sort of like soft decision regarding Ethereum, that in years past it didn't view it as a security, but as soon as it's controlled by proof of stake, that it could be a security? Yeah, that's entirely possible. And if we let the SEC just get away with this kind of frivolous treatment of other projects like Ripple, XRP, I think that is what sets the precedent. That's what creates the environment where they could make that kind of a decision against Ethereum or Solana or at some point even Bitcoin. I know it sounds crazy, but there could be points at which they start to split those hairs and say, well, we found a precedent against this other crypto project. So I think we need to be really careful about that. And this is one of those things where I disagree with Vitalik. Sorry, Vitalik. You say a lot of stuff I like. This is something I very much strongly disagree with. So yeah, I think we should definitely be trying to get along a lot more. In other regulatory news, we've got 16 crypto exchanges that were identified by South Korean regulators for illegal operations. Like my air quotes there, illegal operations. What does that mean? It means the Korea Financial Intelligence Unit announced a crackdown on what they termed illegal virtual asset service providers. 16 of them in their report. KuCoin, BitTrue, and DigiFinex are believed to be on that list. The websites operated by these exchanges could face a geo ban, so no longer operating, at least in South Korea, as soon as authorities move to protect investors in their country. Regulators in South Korea have intensified efforts to oversee crypto activities since Terra crashed. So I guess slow clap, Do Kwon, you did it. You got South Korean regulators on board to try to figure out how to protect investors from problematic coins like Terra and UST and the Anchor protocol. But I mean, is this a bridge too far? No pun intended. What are we doing here? What does this really mean for the rest of the world? If South Korea does this, at what point does North America decide to start doing this in the U.S. and Canada? Because South Korea and the U.S. are pretty friendly. South Korea and Canada are pretty friendly. There's a lot of commerce coming out of a lot of exports coming out of South Korea that the entire world enjoys, right? Between cars and tech products, and then of course appliances, right, for everyday use. I mean, who here doesn't have a Samsung appliance or hasn't interacted with the Samsung appliance between vacuums and microwaves and of course TVs and then refrigerators and stuff? Just shoot, even like stovetops, ranges, and ovens in your house. They make a lot of stuff and they export a lot of stuff. So if South Korea is doing this, what will that mean for us in the near future? If they're cracking down on KuCoin, how much longer will it be before the U.S. says, well, got to protect our investors here too, so KuCoin, you're out? I kind of worry about that just a little bit. But yeah, that's a precedent being set there. The EU is trying to limit their banks' exposure to crypto as well on the regulatory front. And crypto assets like Bitcoin, which they consider risky and collectively categorized as Class 2, would have the highest caution rating, limiting banks from lending beyond a certain cap, according to a European parliamentary document. And this is their quote: an institution's total exposure to so-called Class 2 crypto asset exposures must not be higher than 1% of the institution's Tier 1 capital at all times. Now, in a way, this is kind of good, in that what they're saying is they can't just rehypothecate their holdings. What does rehypothecation mean? It means taking the same asset, right? Just say if I'm a bank and I say, I'm custodying this pen for you, then I can lend this pen, right, to more than one person. That's the way banks do their fractional reserve lending. And that's the way they get into trouble too, right? We've seen this many times in the past, but we let them do it, right? So central banking or central banks and then out to the retail banks, they basically rehypothecate, right? They reuse the same collateral over and over and over and over again. And I think what they're saying here is that because of cryptocurrency's very hard money nature, that they can't do that. They call it risky, but at the same time, for them it's risky because in fiat currency, they can just pretend like they have everything they need and just reuse it and reuse it and reuse it for lending. With crypto, you can't get away with that, right? So I think that may be a good thing in disguise, but I don't think that they're framing it that way. I think they're just trying to make it sound like crypto is risky. They're not taking the accountability that they don't really have the backing in the event that there's a run on crypto prices, and they have to get their positions called, right, and get liquidated for their holdings. So it's Interesting the way they're framing that. We're the risky ones, not them, for sure. Yeah. Fractionalized reserves, that's not risky. Tier 1 capital refers to the core measure of a bank's financial strength from a regulator's point of view and stands for the core capital in a bank's reserves. Class 1 crypto assets, such as regulated stablecoins, would have no upper ceiling and flexible capital requirements as they are considered less risky. This is insanity. The US dollar, the pound sterling, the euro, these are not backed. These are not backed by any kind of hard measurement, right? These are typically backed by circulating debt. So how is that a class 1 crypto asset? Well, I think it just has to do with their system preferring its own, its own core currency, which is, I guess that's fine. But class 1 versus class 2, this is what I'm hearing is exactly the opposite for me. What I'm hearing is I need more of these class 2 crypto assets in my life, and I probably need fewer of these class 1 crypto assets in my life. Hey, chat, tell me what you think of that. What's your position? Do you want more stablecoins in your portfolio right now, or do you want more real cryptos? I know for my part, we may see lower pricing on these cryptos. So, I am keeping quite a bit of dry powder in the form of stables. But I know over time, I want more exposure to the real crypto. I want more exposure to the hard assets like Bitcoin. I don't want more stables. I don't want more fiat in my life. We've already seen how they've been deflating the prices of, they've been rather inflating the prices of common goods. I don't think I want more of that in my life. But apparently in the EU, that's what they're looking for. They're also saying Bitcoin fell 1.74% in the past 24 hours to trade at 23,000 and change in Hong Kong, while Ethereum declined by 2.6%, according to CoinMarketCap. So they're trying to reinforce the fact that, yes, crypto is volatile. Crypto does move, up and down. But the regulation, I have some concerns about. Hey, chat, tell me what do you think about crypto regulation? What are some regulations coming up that you're aware of that have you concerned? What are some organizations that you think we can highlight here on Mind Your Biz to try to be more involved in crypto activism? Because I think that it's time. We really do need to use any platform that we have and any social circles that we have to help make the situation better. Tell me in the chat. Let's move on to the next segment, though. We've got stablecoins. Stablecoins. Yeah, I'm going to keep talking about stablecoins, guys. It's pretty important, actually. These days, didn't think it would come to this, but stablecoins are a super important aspect of cryptocurrency that we've got to tangle with, especially when you have people who've been involved in crypto and have not known how to peg their profits or when to take profits, but maybe foolishly reinvest their only profits back into things that don't help them out in the long run. Right, it's very, very common. We saw it with UST and Terra, right? People who took what they thought were profits in a very toxic asset. So choosing your stable coins wisely is part of the game now. It's a reality. Right? We're all on board of this. Yeah. But Tether hires an accounting firm, BDO Italia, for stablecoin reserves, adds monthly reports. So BDO Italia is going to produce the monthly attestation reports for, dude, Kate, you're great. You're a lovely person, but Kate, yeah, there's a D missing there. Your UST needs the D. It's USDT. There you go. Guys, these are jokes. I know I've met Kate in real life, and she's a great person and great journalist, but somebody needed to prove that. All right, so yes, Tether. So here's the thing. Attestations are a big deal. Being able to prove that these kinds of stablecoins actually have what they say they have in reserve is a big deal. And I've said here on Mind Your Biz, I've got concerns about USDC being prepared to bend the knee to regulators too fast, right? With that sanctioned list from OFAC, from the US Treasury, USDC or Circle was very quick to say, you know what? We're going to start sanctioning users too. We're going to start shutting down access to wallets as well. That's going to cause problems, and it's going to wreck decentralized projects like MakerDAO's DAI stablecoin if it's reliant on USDC. If USDT can prove that it has its reserves on a regular basis by using third-party attestation, then who knows? It might become something that is a proper rival to USDC. And frankly, in day-to-day markets and the way that stables are actually used on the street, USDT does have more volume. It does have more velocity than USDC. It's something that nobody likes to talk about because we all think that we want to be regulatory. We want to have regulatory compliance. But when it comes to just being able to use cryptocurrency decentrally, USDT does that. And it does it in higher volume than USDC. Tether is kind of the everyman's stablecoin. And it's taken me a long time to sort of come to grips with that. But Tether is used because it's useful. And USDC is becoming decreasingly used on the streets, so to speak, because it's obviously not as useful. They shut people down on a pretty regular basis. Tether has a history of doing that when there are large-scale hacks, but pretty much when there are large-scale hacks only, not when there are regulatory bodies that are trying to flex. So anyway, Paul D asks the right question in the chat relevant to this conversation. Why use DAI at all if half of it is USDC? It's a great question. We asked that on the last live stream. I've got a little mini segment that talks about some of the backing. The MakerDAO group is, well, they've proposed a sell-off of about $3.5 billion of their USDC. But what they're looking at acquiring is Ethereum. This is going to be a problem for their collateralization ratio because they will then be entering into what's called a collateralized debt position to back their cryptocurrency. And if Ethereum dips in its value at all, which it has over the last 48 hours since we live streamed, then it means that it'll be fractionally reserved, right? It'll be fractionally backed. Loot Patient says, hat looking good, my man. I appreciate it. This is my Fed LARPer hat. It's part of the Fed LARPer series. I got a couple others. I've got the Special Operator LARPer hat. I've got the Urban Camo LARPer hat, the SWAT LARPer hat. This is just fun, guys. I love it. Because somebody said, like, Mine.your.biz looks like a Fed. And I'm like, well, we can do this, man. We're going to lean into that branding. Besides, here's the thing. These regulators, they're LARPers too. They act like they understand how crypto works. They don't. So we're going to fight fire with fire. We're going to LARP against the LARPers. Appreciate that. It's just funny, man. People have opinions, and who knows what informs them. But yeah, USDC being half of the backing for the DAI stablecoin, that could be viewed as problematic. But them trading all of that for Ethereum could become genuinely more problematic in terms of backing a stable coin. They do need a stable reserve, and if they're going to use a less stable reserve or a less stable asset for the reserve, we saw this in the case of Terra and UST, they need a collateralized debt position, right? They need the thing that they're using to back it needs to be over-collateralized. And it needs to be over-collateralized to the point that the volatility in that asset does not screw up the backing for their stablecoin. Now, if it's at least 200%, in my mind, like double or triple a 300% collateralized debt position, then maybe that's okay. But even then, we've seen cryptos dip by 85%. So a 300% over collateralization may not be enough. Now, where we are in the current markets, maybe, but even that is a gamble. Like, we don't know for sure how much more blood there will be in the streets in these markets in the coming months. So it is a conundrum. It is a problem. And one of Vitalik's quotes that I agree with on the stablecoin situation is that, MakerDAO just selling directly for Ethereum could be a little bit too risky. It could wreck the value of their stablecoin. It could depeg very easily if they just sell that USDC for Ethereum. But I think it's a very solid sign that Tether is serious about being that proper rival to Circle, right, to USDC. If they get this third-party group doing the attestation, I love that they're choosing a European company, right, the BDO Italia. It's also kind of cool that it's coming from one of the GIPS countries, right, Greece, Italy, Portugal, and Spain. These are countries that tend to suffer the worst and when we go into market downturns. So this could be a very helpful thing for those countries. But tell me what you think. Do you ever use Tether? I know I do. But I use it because it's useful. I don't hold Tether, but I use it because it's useful. There's a lot more in circulation. In my experience, the volume and the velocity is just higher on Tether. I don't care what people say about compliance. There are differences, and it's not that I don't want to be compliant. It's that when you hand me a dollar bill, I don't care where it came from if it's fungible. I don't care where it came from. If you owe me, $15,000, I'm not going to inspect every single bill that you hand me. I just want to know that you have $15,000. And Tether seems to have a lot more liquidity just available. So if you owe me $15,000 in cryptos and you offer to pay me in Tether, I'm just going to take it, right? I'm just going to take the Tether. I'll just accept it. And if I need to trade it, I'll trade it. But just saying, I'm not going to be that picky about stablecoins at this point. I am going to be keeping an eye on DAI, and I am going to be keeping an eye on the USDC situation moving forward. All right, guys, random pick. Moving on from stablecoin news, Chiliz? What? CHZ? Where in the world did this come from, and why did we not know about this? So Chiliz is one of the biggest entertainment and sports cryptocurrencies created by a Malta-based fintech provider. The token has been recently endorsed by Arsenal Football Club, which most likely caused the week-long rally in the market that put Chiliz in first place as the most profitable asset this week. So this was not on my radar, but I couldn't really ignore it because it's making all the headlines. Did you know about this token at all? Could you have known about it? A lot of us are U.S. citizens in the Mind Your Biz community. We got a lot of friends from across the pond as well, but we got a lot of North Americans, right? A lot of Canadians, a lot of U.S. citizens, a lot of South Americans as well. But were you aware of Chiliz? Is this in anybody's portfolio here? I could not have seen this coming, but kind of cool to see that there's a new contender, right? These little come-ups, right? These 2Xs and 3Xs, the 4Xs, 10Xs, they can come from anywhere, even during market conditions like what we're experiencing right now. So keep your head on a swivel. I guess that's what I wanted to bring up, is that we can find these little dark horse cryptos that can help give a lift to anybody's portfolio if you're paying attention to them. So there is a case for speculation in crypto, especially when the markets are down. So that's kind of the bottom line, the take-home lesson for me. And a bit of adoption news. This is an interesting one. I didn't expect to see this from Australia, but in terms of adoption, apparently Australians can buy gasoline, petrol, fuel, and chips with crypto across 175 gas stations, right? So this is the AUD-backed stablecoin, is part of the catalyst to make these crypto payments mainstream in Australia. And it's worth mentioning, again, talking about stablecoins from before, that US dollars have been the main denomination of most stablecoins for the majority of crypto's history. So seeing more, pound sterling, seeing more euro-based, or denominated stablecoins, and now seeing more Australian dollar or Canadian dollar or any other, right, major economy, seeing their dollar or their main currency as the denomination for those stablecoins could help a lot in adoption. So that's been part of it. But the name of the group is called On the Run. It's a great name for a gas station, right? They've launched a crypto payment support across 175 of its stations, and apparently it's not just chips. Apparently it's also Krispy Kreme. Apparently it's also Krispy Kreme. I read a different article that was talking about it. So you can buy your gas, you can buy your snacks, and you can buy your gas station donuts, right? Little prepackaged Krispy Kreme donuts that are already like 5 or 6 hours old, but hey, to each their own, right? Like I rarely eat donuts at all. So when I do, it's like, man, I want them fresh. I want them to be good. I want it to be worth the effort. But the point is, if you were in Australia, you could buy them with crypto. That's the adoption news. Appreciate you being willing to sit through all of our news segments, guys. This is, I think, some of the most important aspect of the new live stream format is that we're going to go over that stuff. And as promised, we're going to skip through some of our other DeFi Llama and our other content. We're going to go straight into some of our crypto mining profitability and into our portfolios. So line up your questions as well. We do have live Q&A, obviously. I have been trying to interact with the chat as real time as I can, but let's take a look at whattomine.com. Got it into dark mode for your viewing pleasure. And currently at 14 cents per kilowatt hour, profits are above that very top of the line, the RTX 3090 Ti, which is kind of our benchmark. It's above the $2 mark and sustaining that over $2 mark. But that is primarily for Ethereum or ETH hash, right? So the Dagger Hashimoto algorithm and used on Ethereum or Nice Hash primarily. Those are the top two for pretty much every card profile. pretty much across the board for anything that can mine those two. Those are the coins that are in the money. Those are the networks that are in the money. Everything else is a distant second, right? So even for those cards where Zell hash is desirable, it's crazy that Flux is not the top earner for something like the RX 7800 XT or 6800 XT, but actually it's a nice hash Zell hash algorithm. That's crazy to me that it wouldn't make the top of the list there. But Flux is making our profitability lists here. It's great to see Flux there. Ravencoin is showing up for some of the lower spec cards, but it's great to see Flux across the board on so many of these cards. Ravencoin and Flux, I think, are going to continue to duke it out all the way up to the merge and beyond. And frankly, we've known the roadmap for about 2 years. We, in our earliest interviews with Dan Keller and with Miles Manley when he was still associated with the Flux project, when it was back when it was still just Zell Cash, right? We did talk to them about turning their masternode network into an enhanced service node network. It was not roadmapped at the time. We did suggest it here on Mind Your Biz. Am I taking credit for their roadmap? No. They had to go and execute all that. That was a lot of hard work. The point is that we did talk about that early on. Here they are actually doing it. At that same time, with Ravencoin, easy to mint assets from the wallet. That's cool. But what else is new? Not a lot. The restricted assets, that's cool. So you might be able to play with regulators. That's awesome. But is it a proper programmable smart contract network? No, it's not. It hasn't built out that functionality. The fact that Flux allows for people to run their own bespoke code on a decentralized cloud network, that's really powerful because it's so flexible. Do you want to run something that runs in a code container, such as Docker? You can do that on the Flux network, right? Ravencoin will let you mint an asset that looks a lot like an NFT, and that's cool. That's very powerful, but that's not as generally useful, right, as Flux network is. But tokenized, decentralized cloud network, kind of cool. I still dig, as far as just a head-to-head use case, I still dig what Flux is offering more than what Ravencoin is offering. It feels more relevant to me. But you tell me. I mean, Ravencoin isn't a bad project by any stretch. I just have a personal preference there. Do you have a preference between Flux and Ravencoin? Tell me in the chat. Would love to know your opinion on the matter. But let's jump into our portfolios and round out the hour with our portfolio management. We've got GPU mineable coins, and Flux is still at the top of that list for the long-term hold profitability. Ravencoin is there too, but it's down 56% from when we made our entry way back in May. Right, so we had quite a long hold for some of these cryptos, and we created a virtual purchase. Right, this is a paper portfolio. First off, these are paper trades. I need you to know that. I've had some people in the past ask like, "Oh, you're a site to my Inu whale." It's like, dude, you don't watch the stream, do you? Like, no, I'm not. I disclaim it every single time we go over this portfolio. But these are paper trades. Just for your information, it is pretty much just like, what would these coins look like in my portfolio if I put $1,000 into every coin that I could? It's a cool question, right? It's a cool thought experiment. Like, if you could put $1,000 into every crypto you were ever interested in, it's kind of like people who are, whatever, hobbyists and the import racers, right? Import tuners. Like, what if you could have a Nissan Skyline and the Acura Integra Type R of the specific year that you wanted it, and then also, right, the Honda Civic Type R of the year that you wanted it, and then also some German makes and models, and the Subaru, and right, and also the Mitsubishi, like a Lancer Evo. Like, what if you get like every one of these little like import tuners that you always wanted to just have in your garage, right? Like this virtual garage, like you're playing a video game. It's a cool thought experiment. And in crypto, the nice thing is when we have enough profits to take profits, we can grow our portfolio a lot faster than you can just buy the next import tuner that you want to experiment on, right? And do a bolt-on turbo or whatever. So crypto makes some of those dreams come true. It's kind of fun. But here we start with just throwing 1,000 virtual dollars at everything we want, right? So we are just kind of like playing a video game here. But everything we want already had $1,000 put into it. Not everything still has $1,000 in the portfolio. Haven, for example, we're down way bad. We are down so bad. Like we're down over 95%, and Haven is just absolutely getting the life beaten out of it. It's very sad because they had such an admirable start, and they had an admirable beginning to figuring out how to take the privacy of Monero and then still have stables associated with it. Monero, for example, is not having the same regulatory problem that Tornado Cash is. And it doesn't look like it will, because it was always private by default. So for Haven to say, we want that level of privacy, but we also want stables, it was a really audacious thing to do. It was a really tough problem to solve. And we talked about it in those terms from our very first interview with their very first team up to our most recent interviews with their secondary team, or with their fallback developer team. They had a really serious problem domain to tackle with. And the fact that they couldn't quite do it, I don't fault them for that. It was a very lofty ideal, a very lofty problem to solve. But I think that Monero, it just does one thing and it does it well, right? Privacy by default, and so it's pretty good. Paul D brings in some really great options here, and we're going to talk about those when we get to the ETH, but the potential ETH mining successors in that side of the portfolio. Love the feedback there. Keep it coming, guys. Tell me what you want to mine. Tell me what you think is going to be your pick after Ethereum does the Beacon Chain merge, and I think it will. I guess I think the end of the line is coming. I don't think that we're going to have the same problem. I've joked about it in months past, but the fact that they've committed to a specific number of hashes left, a specific number of blocks left, essentially a block height where they're going to do this merge, I think we're pretty much seeing the end. It's finally coming, and it pains me to say it, but they're committing to something. That's not always something the ETH core devs do. So it's happening. Tell me what your pick is in the chat. Definitely appreciate that in advance. But guys, talking about privacy coins like Haven, it's a bummer that it just bled out the way it did, but it did. Zono, also really great little project, sort of the little privacy project that could, but it bled out a lot of its profit too. So I would love to get the Crypto Zoidberg, who's still a lead developer for Zono, back on the channel. Did you see my interview with him? I republished it here, and it did really well. Apparently picked up by the algorithm here on YouTube, but it did really well. Go watch that, and I'll leave a link to that in the description of this video, or in the chat, or the comments of this video. But Crypto Zoidberg, who is now working on the Zono project, was the earliest public developer of the Crypto Note protocol, which became Bytecoin, which also became Bullberry, right, through a fork, which also then became Zono. But all of that code base was forked into becoming Monero. So the guy who's currently actively, publicly developing for Zono was the first person to ever touch the Monero code base. Pretty powerful, right? It's a pretty powerful narrative there, pretty powerful investor narrative. I want to talk to this guy and continue to pick his brain. What does he know about privacy and developing these systems and distributed networks that other people don't know? What has he been able to do, basically almost entirely by himself, that dozens of community members in Monero, that it required dozens of people to do? Right? Monero Research Labs, really good actor in the privacy space, but I love what Zono is doing there. I love the fact that there's still a person that's accessible and doesn't think that his poop doesn't stink. Right? He still takes feedback. Grin, I've committed to taking a closer look at again when we do our privacy series. So we will be talking to possibly John Trump over at Grin, or anybody who's currently actively maintaining that. But as privacy projects go, it's also kind of struggling, right? It's trading in a very manipulated looking pattern there as well. So a lot of our privacy oriented projects not doing as well as we'd hoped. But for GPUs, our long-term hold has pretty much only been Flux. 7 days. It's Ergo, Flux, and Etho protocol have had a little pop upwards. Ethereum Classic and Zono as well. But mostly these two, I think, have the highest market cap and the highest chance of survival. They're doing really well. Looking at our hard drive mining portfolio. Hard drive mining portfolio is what do you want to show me here? Hard drive mining portfolio. Do you want to show up at all? Do you going to help us? Help us, portfolio? Help us. Help us help you. Okay. We're jumping straight to the GPU ETH replacements. If it can show up at all? Well, we're moving at the speed of CoinGecko. Let me read off some comments here. Got Paul D saying, I like Raven better from a principal standpoint. Fair launch, no dev wallet, real decentralization, but Flux does actually useful things. I couldn't agree more. That is kind of the problem, right? Like, it's also the Bitcoin versus Ethereum problem. Bitcoin is more provably fairly launched with less centralization of ownership, but Ethereum also provably does a more useful variety of things. Bitcoin does some very useful things at its core, and it can have a programmable layer added to it, and it can have a scaling layer added to it, but by itself, like literally Bitcoin Core, it's kind of a pet rock. It's good to have if you need it, or kind of like a lump of gold, right? It's great to have when you need it. When you don't need a lump of gold, what do you do with it? Right? It doesn't. You can think about how shiny it is. Think about how valuable it will be one day, but it's about it. Paul D says, I switched to mining Ergo and Ethereum Classic. I think that was a good move. Here's our GPU ETH replacement side of the portfolio. And we've got Ethereum Classic, Ravencoin, Flux, Ergo, and Firo. These are the 5 I've added that I think will be very real successors to Ethereum in terms of pulling hash rate away from the network. I think it's validated by some of the net hash, and I think what I want to do is, instead of having, let's get up MiningPoolStats.stream. If you don't know this resource, then you should. I'm going to go and throw that into our chat right now, just so you have that. Chat, those of you who are live here. What the? That's not what I meant to do. How funny. I just I did a recursive post of this live stream. That's not what I meant to do. Go ahead and delete that. No. And I'll go ahead and pin our little tool right there at the top of our chat. Pin that message for you. As MiningPoolStats.stream is great tool when it loads. Yeah, when it's otherwise choosing to show up. We're having some technical difficulties here at the end of the stream. Don't know what's going on there. But MiningPoolStats.stream should be... you know what else? I apologize. It's rare for me to do that. Go HTTPS. Didn't quite load the... Oh, mine-in. Oh my gosh, I'm a mess right now. There's missing a G. Apologies for that. Here we go. I didn't have this prepped, so... yeah, I'm going to get rid of that as well. Remove that. Throw the real resource up right here. MiningPoolStats.stream. Good grief. That was needlessly difficult. But let's take a look at some of the algorithms right now. And we've got Firo. Looking at the current hash rate, or net hash, is 54 gigahash, and it's on FiroPow, which is a fork of ProgPow, programmatic proof of work. So it's something that is a bit more decentralized, or a bit more difficult to set up ASICs to mine. And then Ethereum Classic, just doing ETC hash, basic, very simple fork of Dagger Hashimoto. We're looking at the terahashes right there. Crypto Mikkel is feeling the struggle. Appreciate that, brother. Thanks so much. Guys, the moral support, it really does mean a lot. Let's take a look. Zellhash is not even being tracked. Oh my gosh. It's not even being tracked here on MiningPoolStats.stream. So there's that. That's crazy to me. Oh, you know what? That's because it just doesn't want... No. Crazy. Okay. What is it trying to lump it under? Yeah, Equihash in general. That's not very good. It's not very nice. I don't like that. But yeah, so looking at a total of megasouls, so not even in the gigasouls at this point. And yeah, comparing that to like Bitcoin Gold, which is also in the low megasouls area. We've got Ion, that's still a bit of a competitor, not by much. Ycash, also in the kilosouls. Z Classic, right? So these are kind of going to be the rigs that are optimized to mine Flux, that you're going to be pulling some of that net hash away from. So Paul D says under Equihash 125.4. Thank you for giving me the N and K numbers there for that specific variant of Equihash. Guys, here's the thing. If you have rigs that are optimized for a certain variant of Equihash, it doesn't always mean that they'll be optimized for another variant of Equihash, because of the memory hardness that can be adjusted with those two variables I just mentioned, the N and K numbers. So you can't, or the scratch pad values of that mining algorithm. And for anybody who's tuning in who's like, hey, this is nerd stuff, why are you talking about this? That's why, because it's nerd stuff. So we've got to talk about it. But yeah, otherwise, how are we gonna learn? But the point is, we've got a bunch of competitors that are kind of generally lumped under Equihash as the mining algorithm. I think these are all going to be your competitors for the hash rate on Flux right now, and then you're going to get some rigs that from Ethereum that can do this variant of Equihash pretty easily. But when it comes to like ProgPow, we might even have Epic Cash pulling some hash rate away from it. I didn't even consider that, but we might get just a tiny bit. I mean, we're only looking at, there you go, 45 gigahash total. So it's not that much. It's really not much at all. And if we're being very honest, it's like kind of ice mining is the only game in town. Everything else is like barely competing at all. So yeah, we've got maybe another contender there. I am considering just adding it. I think that Epic Cash may be more of a contender here than people realize. Yeah, the market cap is lower, but it's done really well. So leaving it there, just in case. I just want to make sure that we're not blindsided by that possibility, because I think that could come out as being part of it. So ProgPow, the other variants, you got Ravencoin that is technically on ProgPow. You got Grin that's not technically on ProgPow. It's on the Cuckatoo and Cuckaroo, the variants of Cuckatoo and Cuckaroo that are a lot more memory hard. So it's also a GPU mineable coin in that way. But yeah, Swap. Oh my gosh. I think I cut that from our list from before. I didn't even think it was on there. And then Zano too, which is technically a ProgPow coin. But as far as these really high market cap coins that are contenders here, it's kind of pretty much Ravencoin, right? That's pretty much it. Eternity also may have a little bit of hash rate, but it's not nearly on the same level as Ravencoin. Hack Crypto is in the chat. Guys, we've got another celebrity. We've got Steve McGarry from Hack Crypto over in the chat. Do be sure to check out the interview that I did with him, the creator highlight. He's got a couple projects coming up that are really, I think, going to be worth your time if you are a builder in the space. So check that out. Just released yesterday. You should view that. It's in our interview playlist, so look for that. Because MiningPoolStats.stream is gonna tell us a little bit more about where this hash rate currently is. And I think that adding that one additional coin here is going to give us a little bit of insight. But I think Ethereum Classic, Flux, and Ergo are going to experience the biggest pop in mining numbers. That may mean that your profits do go down over time. Ravencoin, Firo, I think are going to be passed over just a little bit. Epic Cash is going to be slept on a little bit too. But I think in terms of mining something that brings you a profit, instead of just being seized on by miners that are leaving Ethereum, you should take a look at some of those lesser known coins, your Firos, your Epic Cashes, and the others. They're going to be less likely candidates for that like obvious succession, right, from Ethereum. And because of that, they're going to have lower competition, lower difficulty, and higher profits for you if you're mining at the small to mid scale. So, all right, guys, that's our portfolio kind of in a nutshell. I skipped straight ahead to that. I don't want to skip the whole portfolio. Let's take a look at a couple other things before I let you go. So, guys, I'm kind of moving in reverse order. Let's go through our stables really fast now that we've actually got CoinGecko wanting to work with us. But you can see Tether, I mentioned it before. It's got, they added $2 billion of market cap while USDC was losing a couple $1 billion of market cap. They've always got at least $10 billion more USDC coin or USD. USD coin is always kind of trying to get into that top spot, but Tether is used because it's useful and it's got more volume. I cannot say it enough. It's just got more volume. So to see that they're getting that third-party attestation done is huge. There we go. 24-hour trading volume, $43 billion. USD coin, right? Current trading volume, $5 billion in the same time frame. Guys, it almost does 10 times the volume. I don't know how else to say it. I'm sad that the MakerDAO is not seriously considering using Tether. I'm really sad they're not seriously considering using Tether. It's got so much more velocity, so much more volume. And if the attestations can be considered valid, then why wouldn't you just consider it backed? Get past the FUD. It hasn't failed yet. It's depegged very lightly for very short periods of time, but I still accept Tether. I still use Tether. Why wouldn't you? Give me a good reason in the chat. Other than just compliance, right? Like, because you shouldn't be using Tether as like a long-term holding strategy, but give me what you think is a good enough reason to consider not using Tether. Yeah, but I'm open, guys. I'm open to changing my mind. Just give me new information. Give me information that's useful and new. Binance USD. This is another one that's actually got, I suspect, higher volume than USDC. Nope, about on par. A little bit less, 24-hour trading volume, a little bit lower, but you consider it's got like less than half the market cap. It's got almost 1/3 the market cap of Circle, right? USDC, and there it is trading the same amount. Like, USDC is something that largely doesn't move. And I've been saying for a while that I think that part of the institutional paper, right, the commercial paper that backs USDC could very well be the holdings of Coinbase users, right? I think that they could be just rehypothecating some of your holdings on Coinbase. I have serious issues, trust issues with Coinbase. Just with Circle, we'll say right now, and USDC at this point. But moving backwards, guys, the Tenset Gems. Quick check-in on our Tenset Gems. Makes me really sad. Everdome has been on a serious dip. So if you've been looking to maybe acquire some, just pay attention to that. I wouldn't call it a buying signal per se, right? It's not financial advice. But I am going to say that Everdome is one of those metaverse plays that a lot of people have been interested in seeing succeed. Me included, right? I'm very interested in seeing it succeed. But, we got to see that happen organically. And so this market, the hype cycle may be over for a little while. And then it's got to deliver some product. But in the meantime, since it has that token, if you wanted to get exposure, I would say pay close attention to that trend. And then, maybe set a target for yourself. Maybe. Just consider it. MetaHero as well. That's going to be, right, part of that ecosystem. And Fame MMA, I don't know. Maybe that's not your cup of tea. But I think these two are going to become very instrumental in the metaverse ecosystem moving forward, the broader metaverse ecosystem. IBC Gang. Let's take a look for some recent wins and losses. Cadena is our only real holding here that's in the profit, right, long term. But over the last week, we've got Sentinel coming back up, Regen, Osmosis, Persistence, but that's because they had some ground to recover, right? They kind of needed to come back. So pretty cool to see that there is something from the IBC ecosystem that is doing better. But Persistence in particular, huge favorite. But that said, guys, I kind of have to disclose, when you watch some of their tutorials, like the recent Peace Day tutorials, you're going to hear a familiar voice, right? Like, I've got a lot of exposure to their ecosystem and like personal experience with their ecosystem. So instead of familiarity breeding contempt, which it sometimes does, they're making a lot of good choices, and I've been able to see them up close. So familiarity for me has helped instill a little bit more, a little more confidence in what they're doing. So just saying, guys, but I do need to let you know, I'm probably a little biased because I help produce some of their training media, some of their educational media. Sentinel, I do not do that, but it's good to see that the decentralized VPNs are starting to get a little bit of love. I don't know what kind of a shot Sentinel stands at survival after this bear market. Not gonna pull any punches, guys. It could be really dire for them. It could be a little less good for them. Just saying. That would be unfortunate, but not every project is going to survive. Even some good, strong fundamental projects might not survive. So just be aware of that. But then Osmosis, it's in my mind, it's a foregone conclusion that Osmosis will do well in the long run. It is like the DEX on IBC. But seeing that market cap grow, I personally don't see how it couldn't. Right, you got Uniswap doing far better, and it's kind of the main DEX on Ethereum. Why wouldn't Osmosis do really well in the long run? Secret Network doing the least worst, and then Akash Network right behind it at less than half the value of Flux Network right now. Wink, wink. They've got a similar business proposition, right? And they're proof of stake already. They're not reliant on Ethereum. They're not reliant on Cosmos, but they are kind of part of that ecosystem. So I think they're pretty strong fundamentals there. But that's our IBC Gang ecosystem. Take a look at the junk drawer really fast. This is our side of the portfolio that's all speculative bets. Basically, the degen, the poop coin casino over here is our junk drawer in a lot of ways. Saitama Inu is still the top holding. It's still wildly profitable compared to to the entry that we put in. So if you would have put in any money at all, a single dollar, right, 15 cents, and still like taking the hit on the gas fees for buying this on Ethereum, you would still be in the profit. You'd still be in the money. Crazy like returns on Saitama Inu for whatever reason. Everrise, Floki, UFO Gaming, Luffy, they're all in the money still from when we made that portfolio entry. Least profitable is Zion Network, and since we made our trade in Hex, it's down quite a bit. It's a bummer because I know there are a lot of people who are excited about that ecosystem. I've talked about Pulse Chain. I've made no secret of the fact that I'm interested in seeing how Pulse Chain does. I think regardless of the Beacon Chain merge on Ethereum, that Pulse Chain stands a real shot at doing better than a lot of the competitors in the L1 space. And I think there are a lot of good reasons for that. Stay tuned for a Pulse Chain exclusive stream or Pulse Chain exclusive media. I want to talk more about my reasons for feeling good about that, for having some optimism about, no pun intended, some optimism about how Pulse Chain will do well compared to projects such as Optimism that are getting their faces punched right now. They're just getting mauled at the moment. But bottom of that list is, let's flip this around to 7-day profit. Really, that would be helpful. Caspa, UFO Gaming, Celsius had that crazy pump this last week, week or so, which is interesting. But our portfolio entry shows that it's still way down. Like if you were holding it for the long term, like you're still wrecked holding Celsius or having your funds on Celsius. So good luck with that. Shiba Inu, Kishu Inu, Dogelon Mars, all the Inus, right? They're up this week, right? They're getting some love. It's the halo effect of being associated with Doge. So it pays to be a dog these days. Proof of stake smart contracts, we got Avalanche, Solana still in the money, but over the last 7 days, let's get that sorted correctly. Nope, doesn't want to. But last 7 days, it's EOS, what? Coming back from the dead, Ethereum, and Wax. And I think this is one of those buy the rumor, sell the news things, right? Ethereum announcing that date for the Beacon Chain merge helped it a lot over the last week. Last 24 hours, not so much, not quite as much, but last week it's doing a little better. And then Wax, which I think is kind of poetic, right? Considering it's a fork of EOS. These are some really great projects to be aware of if you're into NFTs. In my mind, they're better projects to be aware of than even Ravencoin, right? Ravencoin has some cool fundamentals in terms of decentralization, but it wasn't built for NFTs. It's kind of riding that trend right now. But if NFTs stopped being a topic of popular discussion and certainly as NFT utility becomes a more central part of the crypto conversation, Ravencoin will drop out of that conversation. It doesn't have the enhanced utility in the NFTs. It kind of is doing it right now, but it might not be extensible into the future. Might not have much utility moving forward. Proof of stake smart contracts, though, that's them at a glance. FPGA mineable coins, Cadena is king still. Just no beating Cadena right now. Teller, Handshake, and Nimic are the least worst performers in terms of the last week's price performance. And last 24 hours, somebody's been manipulating 0x Bitcoin. And audience, somebody here from Mind Your Biz, I hope it was you. I hope you're winning, son. I hope you are. Sorry, nephew. Yeah, ASICs. Talk about ASICs real fast. And I see guys, what's this? What's going on? Where's everybody going? But ASICs right now, last 7 days, ASIC mineable coins. We got SBTC that lost 100% of its value. I don't know what happened there, but Synthetics just like pooped the bed, and it's got a serious problem. I think it's just there's nobody using it is all. Just dropped off. Dogecoin is in the top profitability for all of these coins. Devault is close number 2. Well, for profitability. Market cap, it's basically gone. We're going to need to remove it pretty soon. Bytecoin in number 3. CPU mineable coins. What do we got here? CPU mineable coins, we got Epic Cash in the number 1 spot in terms of profitability, Raptorium after that, and least worst performer over the last week, Quantum Resistant Ledger, then Monero coming back with a vengeance. Hard drive mineable coins, we have got MadeSafe Coin last 7 days, is Filecoin, Signum, then Chia. Chia is holding that support pretty well. We're not going to see that $15 Chia anytime soon, unfortunately, but I am looking for it because that is kind of the price point that the poor investor is telling me that I have to buy. So what am I going to do? I'm going to buy because I have to. But our GPU mineable coins, Ergo, Flux, Zero, and Ether Protocol, again, are our top gainers. Appreciate you staying through to the bitter end while I talk about portfolios and we check to see what is currently profitable. Appreciate you watching all the way through to the end of this video. Tell me, what did you like about today's format? Tell me in a comment, tell me in the chat. Did you like us going through more in-depth news? Would you like to have more Q&A? What kinds of tutorials do you want to see? Because I'm looking at either full node tutorials or setting up servers at home. So we have enhanced privacy and enhanced like sovereignty with our services at home. Tell me what you'd like to see, and I'm going to add that to our lineup of tutorials in the near future. You're the reason I make this media. Remember, I love your face. Stay private and mind your biz.